All right, welcome everyone. This is the first ever YouTube live stream that I'm doing. My name is Vince. I'm VOL888 on X, and I want to welcome those in attendance. Yesterday I had some mic issues, so I apologize for that. I believe the mic is working good. I've been testing it. Yeah, I've got the message that it's working. Thank you. Good to know. Perfect. Okay, well, here we are into the close, and we've got 25 minutes into the close, and wow, we've seen some wild price action just in the last 45 minutes. Tesla actually made a new low of the day and then sharply rebounded, and now it's selling off again. So who knows what's going to happen between now and the close? But I can tell you what the bullish case scenario would be. You know, we had a very unusual opening today. It's very rare to find this kind of opening. We actually opened at the high of the day and immediately sold off. So that's very rare. There's no upper wick on this candle. And what that does is it sets up a potential for a textbook hammer candle. However, we're missing a key ingredient, and that is the body of the candle needs to be maximum 1/3 of the length of the candle. So we're looking at about 384 and a half to even qualify to be a hammer candle. So if this is going to turn into a hammer candle, we're going to need some buying at the end of the day. It's only $3 more that we need, and Tesla can move quickly. But right now we're sitting at 381. Now, a hammer candle, if we do get that, doesn't guarantee that it's going to be a reversal, but it is a reversal setup. The psychology around that is basically that sellers brought pressure all day and the buyers ended up buying that up before the close. And if we do get that hammer candle, what I'd be looking for tomorrow for follow through is a gap up and confirm this reversal. But we're still hanging around just under 382 right now. We're going to need another $2.80 or so before this can turn into a hammer candle. Now, if it doesn't turn into a hammer candle, then it just ends up being a big fat red candle. Less probability of a reversal, in my opinion. So, you know, we did break new lows today. This is the lowest the price has been ever since September 12th. So we never had a price as low as today's low since September 12th. So that's how much we've declined ever since the all-time high. And so we're in a situation right now where Tesla is in a price discovery mode, trying to find new support. We thought there might have been a low that could stick last Monday, but that now was taken out. So, you know, what I've been discussing with my subscribers on X these last few days and has been working really well is just watching some Fibonacci levels. So basically we're looking at the most recent high back in mid-February, and we were looking at the low that was made last Monday. And by the way, this white line here, that's where I think Tesla needs to close today in order to be a hammer candle, to qualify as a hammer candle. But just taking this Fibonacci range, it was very helpful ever since this low was made, because you can see how well price respected these levels. It got up to this Fibonacci level, even got all the way up here before selling off. And yesterday's close was actually a bit of a warning, because we did close below a key Fibonacci level right around that 392, and we actually closed at just below it yesterday, actually. So there was a bit of a warning there yesterday, and what I was looking for today was to see how we opened. If we gapped up above this Fibonacci level, that would have increased probabilities of finding support here, and then I'd be looking for the retest of this level to see if it would hold. Of course, that scenario didn't happen. We got the bearish scenario, which is actually a big gap down. Now, this gap down is a major problem, in my opinion, until it's dealt with. And the reason why it's more bearish than usual is because it actually flipped the script on the bulls, because you might recall on Monday we gapped up. That's this candle right here. This is Monday's candle. Friday closed down here. So compared to Friday, we actually had a gap up. And so we actually gapped all the way up here. So we had this open gap. It was partially filled on Tuesday, and then yesterday it was filled more. But as of yesterday, the gap looked like that. The problem with today's candle is we flipped it around, because this is a bullish gap. Because when you gap up, it means the bulls had enough buying pressure that they brought the price at the open at a much higher price. So that was a bullish gap. And now it's potentially overhead resistance. So not only did we not fill this gap, it remains open, but now we've created an even bigger gap down here. So it's really a time to be cautious, in my opinion. And if you're looking to enter into Tesla, my thoughts would be, we've got a lot of future catalysts potentially lining up for the company. There's a long way to get all the way back to all-time highs, which was right around $500. I would personally be cautious with new entries around here. And at minimum, I think a safer way to play this is to wait until price starts closing above this large gap here. That at least will give you some confirmation that all the pressure that the bears brought the last couple of days has been worked out. It's not a guarantee, but this is all about probabilities. That's what we do. We look at probabilities and see how price reacts around key levels. And again, with price the way it is right now, if we do get a close here, we're right around 382. We're kind of in no man's land. We don't really know where support's going to end up forming. It's possible we could go down lower. Now, with this Fibonacci level, because we made a new low today, we can actually bring this down to today's low. And this would actually give us new levels to work with. And of course, if today's low breaks tomorrow or anytime in the future, then we have to redraw these levels again. But for right now, these would be the levels to look at. If we lose today's low, that would obviously be bearish, and we'd be continuing that price discovery journey to find out where support is going to be found. One other thing I'll say is that tomorrow is Friday. It's actually monthly options expiring, and it's actually heavier options than normal on the open interest because of that. And it's also important because on a bigger Fibonacci, if we zoom out and look at a bigger Fibonacci level on a weekly basis, 390 is actually a level that we've been holding on a closing weekly basis for quite some time. It's been tested several times, but we kept holding above it. But now we are in jeopardy of losing that weekly level at 390. So if we close below 390 tomorrow on Friday, that's another warning sign on a higher time frame chart. We're looking at the weekly chart in that case, and it could lead to lower levels. So 390 is a real key level that I'm going to be looking at tomorrow for Friday. And I think the probabilities of getting there are going to be better if we can get a strong close up to at least this white line, which is about 384.5. The higher, the better. We're sitting at 382. We're going to find out if we're going to get a late day surge here or not. Sometimes that can happen. The other thing I wanted to point out is we are currently trading below Tesla's lower Bollinger Band. Now, in the past, we have sometimes seen bounces from that level. We had a candle back here in early February where we actually closed the entire candle below the lower Bollinger Band. This is actually a pattern that developed the next day, was confirmed as a morning doji star bullish pattern, and it actually led to a big price rise. But there's been other candles where we've closed below the lower Bollinger Band and got a bit of a boost. It's not a guarantee, but it's just a indicator showing that we are stretched to the downside right now. Now, that doesn't mean we can't go lower and ride the lower Bollinger Band down either. So I just want to make that clear. It's not a guarantee that we're going to bounce from here, but we are stretched to the downside. Now, of course, a lot of this is macro driven, and we're watching to see if there's any positive catalyst that the market can take away from the current environment. But so far, we're still struggling here. We got 15 minutes until the close. All right. Well, I'm reading some comments, so it looked like everything was working, but maybe some people are not seeing everything. Is that correct? This is the first live stream I've done, so feel free to give me some feedback. I'm using a new streaming system that I haven't used before. It worked well in my testing, so. But anyways, I'm going to wrap it up here because I want you guys to get back to the trading. There's 15 minutes left. I don't want to take you away from that. I've covered everything I want to say, and I hope to do these on a weekly basis around midweek. Okay, great. Okay, thank you for the feedback. Awesome. Okay, great. Well, have a great rest of the trading into the close, and we'll catch you on X. Bye for now.